Good morning from Level8 Trading. We're going to go over these indexes every morning. I hope you will like and subscribe to the video if you like this kind of content, and check us out at level8trading.com. So, number one, we've had a peace has broken out in the Iran war. They're going to sign a treaty, or not a treaty, and a memorandum of understanding this Friday, I believe. And the markets loved that. We opened up at 1700 Central Time here. This is an hourly chart, big gap. This is the first price it printed, and it went up from there. After the initial hour, this is an hour. It levels off a little bit and climbs slowly, and maybe making a small peak here. Maybe rounding off a little bit. Certainly that Keltner channel is. We're still in extreme RSI on the hourly here and the 4-hour. We've worked out of it on the 30-minute and the time frames below that. The big news this week is the FOMC, the Federal Open Market Committee, is meeting. They'll make their announcement on interest rates Wednesday at 1 p.m. Central. 2 p.m. Eastern. This is a large event every 3 months. This is the one we wait for. We typically see lower volatility during this in the run up to it, and on the day of it they tend to run price up into that announcement. So we'll see if they do that this week. We have housing starts before that. There's a 20-year auction tomorrow at 1. Industrial production. There's nothing really earth-shaking here other than Wednesday, the FOMC. You're going to pay attention to that whatever you're trading. If you're trading, mark that time, be aware of it. There's always going to be some fireworks around it, whether it ends up going anywhere or not after it clears up. Let's go over to our key ranges chart. This is a 5-minute chart. It's been very quiet. This goes back to 4 a.m., but if I stretch this down, we can see that overnight action running up initially and then just kind of drifting all night long. This is our key range from yesterday's low, Friday's low, to today's pre-market high. Big range, obviously, over this move. We've had complete range expansion here. I mean, there's the pre-market low and high completely outside of Friday's auction. So big jump on the news that we were going to sign. The peace understanding. ES will be very, very similar today. There isn't a lot of difference on it. If I were to come here and put on the last value area from Friday. Gonna get that stuff out of the way. We'll say that we're completely outside of the value area from the volume. This is the volume profile volume area from Friday. Completely outside of it. There it is. Very small compared to what we have today. This is generally a bullish read. Obviously so, but one thing that changes that a little bit is that if we go to our options chain for SPX, we had an expected move of 38 here. We are very far away from that. We're going to gap up 96 some odd points on ES, 94 points right now. We would expect with that type of move for the institutions to rebalance to the downside a little bit after that type of move. That's kind of what we would expect to have happen. So this is definitely a bullish read. As far as day trading goes, what happens to us, we're just going to have to see. But after a spike like this overnight, it could go either way. And we've got some RSI resistance going on, so we'll see. We'll see. Going back to that last chart, we've got, look at this on the chart. Treasuries are up. This is when we have the yields down. Treasuries up, yields down, equities up. So this is supportive of bear. This is not extreme or big. So this could fall definitely in the beginning if they want to rebalance to the downside a little bit. Our indexes, what we would expect, are all up. Silver and gold, very much so. Silver's outperforming gold. If we end up to the upside with silver outperforming gold, it could be very positive. Bitcoin up, all of them up. The only ones that are down are the ones we would expect to be down, which are VIX down at 16. This is a little bit below normal. We've seen, the options market's pricing in lower volatility, and that makes sense certainly for this week. We generally see lower volatility on FOMC weeks, certainly up until the announcement, and that's a surprise after that. It can explode. Crude oil is down, I believe, within $3 or $4 of the pre-war price. So it fell fast, once we get to this point. Some gas stations have some of the expensive gas in the ground, but as they work through all of that, we'll start to see some a lot of price relief at the pumps. Dixie, this is the dollar versus the yen, also down. This is positive for equities. Usually it's a more complex thing. And I would invite you guys to go look for this stuff. Go look and ask these questions about how these different things affect SPX would be the question you would ask if you wanted to use one of the large language models. In particular, pay attention to these treasuries in the 10 to the 30. So you might ask, how do the 10 and 30-year treasuries affect SPX price? There's a lot to learn there for you to understand what's going on. And in general, when we trade NQ and ES, a lot of it is driven by the options market on SPX, and that's why we're interested in SPX when we talk about these things. So very bullish. We've got some indicators they may want to rebalance to the downside a little bit. Then we could see a trend day out of this. We're not at the all-time high, and we could go recapture that again up another couple of hundred. It's only a couple of hundred points away, so we could obviously go recapture that all-time high. That's all I've got today. Again, level8trading.com. You can like and subscribe.